Hey guys, welcome to another weekly focus. So we didn't do the focus last week, so I had to make sure I do the focus this week. So before we look at the DXY and before we look at gold, I'll show you guys a trade recap. I'll just do the trade recap for this week because it's going to be a lot of trades going back into like those for last week as well. So let's look at this. I've had two positions already this week. So let's see. All right, let's start right here. So I had this position on the 17th. So let's look at it. That was the first position I had on the 17th, and it was a buy position. So what was I looking at while taking this one? So it was an impulse, then you had a violation, and price was making lows to the downside. So I was looking at this point as an inability for prices to go lower. So I was looking for the push again to the upside, and I think I've explained this a couple of times already. So I'm looking for that impulse, I'm looking for the correction, and I'm looking for buying opportunities again to the upside. So that's what I was looking at while taking this position. And if you look at this was on the 5-minute time frame, but I'll show you guys the aftermath of this. So eventually this played out, but it's kind of tricky because I got stopped out right here. So I got in right here, it didn't take too long, and then I got stopped out. The trade started playing out and everything. Then you had the news event that came out, so you can look at this play right here. That was a news event thing, so it was a spike to the upside, then a spike again to the downside. So give or take, I think it will have still been a little bit difficult just managing this position because the news effect was a spike to the upside and to the downside. So I'm not out, like I wasn't really worried once I took a loss on this one. So that was a loss right there. So I reanalyzed again, and then I went in with a buy, another buy. So look at this right here. So here was the news event thing. If you're looking at this piece right here, you had the spike to the upside, then a spike to the downside. But I was looking at the same structure thing because we were still coming up from this initial push to the upside. We had a violation, price giving us another impulse, and we could see price making lower lows again to the downside. Now this was very interesting because we had these lows right here. Price didn't really take out this lows, so I was still really confident about taking buy positions on this setup thing. So I went in again with another buy right here, and I had my stop loss at this area. So if we look at this right now, so where is price at currently when we've had this minor push to the upside? So I sat within this drawdown. So there was a drawdown right here. I sat through this drawdown, and price just took off again to the upside. So right now this is running risk free because I have my stops moved to break even. So I'm just gonna let this play out, and today is Friday already. It makes it a little bit difficult just holding the positions about the weekend. You're looking at swap fees, you're looking at market open. So once the market opens, you might have a spike to the upside or a spike to the downside. So that's always a difficulty when you're holding positions over the weekend. But I'm just gonna hold this now. My stop just moved already to break even. There's really no risks on the table at this time, so I'm just gonna watch it. So two positions this week. The first one was a loss. The current run is running in profit, but my stop just moved to break even already. So I'm just gonna watch this and see what price does. All right guys, let's look at the DXY and let's look at gold. Okay, so here's a DXY on the weekly time frame, and if you watch the previous focus, I know I didn't do the focus last week, but if you watch the previous focus, I was talking about this area right here. So I remember, yeah, because I had this line thing. So I had this line right here, and I was talking about this area where price closed at, this little point right here. So if you look at it, so let's clean this. If you look at this entire move, so you're looking at sellers coming in. There's this inability right here. You had another push again from the sellers, and there was this inability right here. So you could see price closing at an area like this, and the rest you just had the wicks right here. So that's one point where I was looking at like, all right, cool. If sellers are gonna come in, there's a high possibility we might tap into these areas, and if there's still that difficulty, then you could see a reversal coming in. So there's a couple of things I was looking at on this piece of price action. First, you had this trend line right here, and you had this. So that was just a channel, the trend line in both directions. You had an impulsive move. There was a push to the downside inability. There was a push to the upside reaction again from the sellers. Still this inability. So when you look at this from the weekly time frame, like the bigger picture is, if we're going off of this structure as an impulse and the correction, then eventually we're still expecting prices to come back to an area like this. So that's just a bigger picture thing. Now you need to narrow this to lower time frames. You need to narrow this to minor structure, so you can look at, let's say, the moves for the week, or you can look at daily moves, or you can look at moves for the sessions as well. So it just depends on what structure you're looking at. If you're looking at it from the weekly time frame, it's this impulse right here, correction, price is taking out this lows, but it's not really significant when you look at it this way. It's like it's struggling to make lows again to the downside, so there's a high possibility we might see prices coming again to the upside. So that's what we're looking at right there on the weekly time frame. So let's bring in this psychological levels and see what price is trying to do. Now there's one more thing I want to show you guys on the weekly time frame. So if you look at this piece right here on the weekly time frame, so I kind of zoomed in, but let's zoom out and I'll show you guys this. You look at this on the weekly time frame, it's an impulse and then it's a correction, it's an impulse and then it's a correction. So stuff is lining up already. Bigger time frame thing, I think you can look at this on like the monthly, the 3 months and even the 12-month time frame. It's an impulse correction, impulse correction. So there's still this high possibility we might see the DXY moving again to the upside. Now that's a bigger picture thing, and I've narrowed this down to this weekly channel. And if you look at this on the daily time frame, before we step down to the daily time frame, I just want to zoom into this area and show you guys something real quick. So you see price moving to the downside, it's making lower lows, pulling back, lower lows, and up into this area right here. So there's been this inability of price to make proper lows again to the downside. We had price making lower lows and lower highs. That was a downtrend thing, which was just a counter trend to the bigger move. You had a trend line right here. This trend line got violated. Price came again to the downside, and this is something I've explained a couple of times already. If you see price moving to the downside and you get a violation, it's very okay for you to see price coming back to the downside. And the reason is you want to see the sellers testing this area to see if there's an ability for prices to make new lows. So once there's that inability for prices to make new lows, you could expect prices to start retracing again to the upside. So whilst looking at this, there's an inability for price to go through this area, so I'm expecting prices to move to the upside. Now the psychological level thing, it becomes very important in a situation like this. So if price starts moving to the upside on the dollar thing, where's the immediate point I'm really paying attention to? So if we start moving to the upside, I want to see price taking out or testing this psychological level of 100. So if we can test that, that's going to be like a good thing, because now you can see price breaking out of the counter trend line, violation, retest, inability to make lows. Now we're moving to the upside. So we're using this point as our target point, psychological level of 100. If we can get to this point, we'll wait and see what price is going to do once it gets to this psychological level. Now that's an important area, but at the same time, this piece of price action right here, if you look at it on lower time frames, it's going to tell you a lot. So while you're looking at this on the weekly time frame and you're like, all right, cool, price is just going to move to the upside. If you narrow this to lower time frame, so let's step down to the daily time frame and I'll show you guys what we're looking at. So same piece of price action, you step down to the daily time frame, and on every time frame you can look for structures to play with. If price is making higher highs and higher lows, or lower lows and lower highs in either direction, you can look for opportunities to either go in with buys or go in with sells, or at the same time you can look for opportunities to bring in your trend lines and your channels. So in a situation like this, you can spot this. It's a movement to the downside, it's a correction, and another movement to the downside. So while looking at this on the daily time frame, I was able to spot this. So I bring in the channel and I'm looking at this. All right, cool. If price has to move to the upside on the weekly time frame, then we need to take out this channel right here, or we need to take out this trend line, because as price moves, it's a movement to the downside, it's a correction thing, it moves again to the downside, and then there is a correction. So there's a high possibility at this point you'll see sellers coming in again, and it might just be a temporary move thing. You see sellers coming in just like a temporary move, you get this inability for prices to move lower, then you see the break and price starts moving to the upside. So that's very, like, that's something that can happen easily, and I've seen this happening many times as well. So I'm looking at this on the higher time frame, on the weekly time frame, expecting prices to get all the way to 100, this psychological level here. But at the same time, on lower time frames, I need to play with the immediate structures, and this is a structure I'm looking at on the daily time frame. So if you step down to lower time frames as well, on the 8-hour time frame is the same thing. The only difference is now you're seeing price better, you're seeing more price action. So you look at this space, it's an impulse, and then price starts slowing down right here. But it's the same thing on the higher time frame, it's just an impulse to the downside. Price comes back, gives you a consolidation, it breaks to this downside, and again price is pulling back to the upside. So when I'm looking at something like this, there's certain structures I like paying attention to. So if you look at this piece of price action right here, now you can zoom in and let's say go down to like the hourly and maybe the 30 minutes, and you see it properly. So as price starts moving to the upside, if you go to lower time frames, you see an impulse, there's a break, but then price is making new highs, but the highs is not like really, it's not really impulsive. So it's making a high, there's a rejection, it pulls back, it makes another high. So price is struggling at this point, and it's just telling you, you might see sellers coming in at an area like this, giving you a minor push to the downside, and an inability for prices to go lower, then you might see prices breaking to the upside impulsively. So that's on the 8-hour time frame. If you look at this on the 4-hour time frame, same thing. So now as I step down to lower time frames, I'm just paying attention to the space of price action. So I understand what's happening, like the bigger picture thing. But on lower time frames, that's what I'm looking at, just those immediate structures. So here's what I was talking about. So you can see price making new highs. So this area was taken out, this area was taken out, this area was taken out. But you can see the price struggling. So it's not taking it out impulsively. So it's just struggling to make new highs. So we might see a rejection thing around this area, and then you could see price then dropping again to the downside. So that's something I'm watching on the DXY. And I'll pay attention to this, let's say on the hourly time frame. I'll pay attention to what's happening on the hourly time frame. I might step down to like 45 minutes or like the 30 minutes and just see what's happening during the course of the week. But right now I'll just stay on the hourly time frame and just try to make sense of this piece of price action right here. An inability for prices to move to the upside. I'm expecting some temporal sales on the DXY, and an inability for prices to go lower on the DXY as well. I'm expecting prices to then move higher, and we might see that trend line breaking. So that's a very big thing on the DXY. Now this is very important because if you look at this setup on the DXY, it's going to give you lots of clarity when you look at gold. So I'll look at gold like in a minute, but just have this in mind. Look at the DXY, look at it from higher time frames. You put this on the weekly time frame and you see what price is doing. Price is geared to move to the upside. It just looks, let's say, looking at it technically, price is geared to move to the upside. But then once you step down to like the hourly time frame, there's a lot of price action that needs to get dissolved. So we're looking at this piece right here, movement to the upside, possible reaction from the sellers, push to the downside, inability. Then you could see prices moving to the upside. And at the same time, yeah, look at this. So at the same time, because this, I could put this on down, it's okay. You could see this movement, this correction, and you even see price moving again to the downside impulsively. So that's my analysis right there on the DXY. I'm just expecting some sales on the DXY coming into next week. So now let's look at the next pair, and that's gold. Alright guys, so here's my buy position on gold. So I think I showed you guys this already. So where is it? Right here. So yeah, this is it. So I had my entries right here, had my stop loss right here, and I'm looking at this high. So it's just an impulse correction thing, and then the target is just the immediate high thing. So let's look at this on the charts and see what we're looking at. So this is what I'm looking on the hourly time frame, but you know we need to start the analysis on higher time frame. So we'll come back to this on the hourly time frame, but I just want us to look at the daily first of all. So what's happening? Bigger picture thing, yeah. So when you zoom out, this is looking really good. So all I had to do was identify like the recent price action thing. So if you're looking at the bigger picture, it's an impulse, it's a correction right here, or you can consider everything to this point. It's a correction, and now we're expecting another impulsive move. So looking at it this way, where is price at currently, and where is price most likely going to gravitate to? Now if you're going off of the principle of psychological levels, we've cleared 3,000 already. Now, the most likely area price can gravitate to is 4,000. So these psychological levels, these are the levels I'm looking at. Now, you might decide to go in between 3,000 and 4,000 and look at different psychological levels. Now, you must understand, I choose my psychological levels based on time frames as well, and there's certain things I'm looking at. So it's still possible for you to go in and look at psychological levels between 3,000 and 4,000. Those levels are also valid as well, but it depends on the structures you're playing with, the time frames you're playing with. So you need to make sure everything aligns properly. Personally, I've been looking at 3,000 to 4,000, and once we went through 3,000, the next area I'm expecting prices to get to is 4,000, which is a psychological level right here. So just based off of psychological levels, price went through 3,000, inability for prices to break below 3,000. So where is price most likely going to gravitate to? That's 4,000. So I'm just expecting prices to move to 4,000 and even higher. So I'm just expecting it to keep creeping to the upside slowly. And as it creeps to the upside, then we'll be looking for this buying opportunity. So that's my take on the daily time frame, just based off of psychological levels. Now, if you clean this and you bring in this trend line as well. So initially I'll just put a trend line like this just to track the movement thing to the upside. So I'm looking at this, it's a movement to the upside. There's a correction. You can consider everything right here is a correction, and then you're expecting prices to move again to the upside. So when you combine this, when you combine the trend lines and the psychological levels, they're all aligning in the same direction. Based off of these trend lines, we're expecting prices to move to the upside. Based off of these psychological levels, we're expecting prices to get all the way to 4,000. Now, if you bring in another trend line right here to complement everything, because now you can use this upper trend line thing as your target point. So where is price most likely going to gravitate to? You're looking at the next trend line to the upside. So there's a lot of things that is pointing to the upside that's telling you gold is still moving to the upside, and this is just technical. It has nothing to do with like the fundamental analysis on anything that has to do with like the news. Everything I'm just showing you right now is all technical. So if I clean this right here and let's zoom into this piece of price action. So it's an impulse correction. So I'm still expecting prices again to move to 4,000 on the daily time frame. That's a bigger picture thing. So if you look at this piece right here, there's enough room for us to play. You're looking at this piece right here, there's enough room for us to play to the upside, and you can even extend this and say there's enough room for us to play all the way to this trend line. So not just 4,000, but all the way to this trend line. Now, once you have this bigger picture view on price, it makes it very easy, because sometimes you might have deeper pullbacks coming with price coming back to this trend line. And if there's still this inability for prices to go through this trend line, your analysis remains the same, or my analysis remains the same. I'm still going to expect prices to move to the upside. So that's the structure I'm playing with on the daily time frame. If you look at this on the 8-hour time frame, so let's zoom in on the 8-hour time frame a little bit. So the daily time frame, I had a bigger channel thing I was looking at. Now on the 8-hour time frame, it's a little bit different. So this right here, I had this impulsive move and I had a correction right here. You can look at it this way, price consolidating within this area. Then we had a push to the upside. Now this is very important, because when you look at the channel on the 8-hour time frame, there's a lot I'm looking at right now. So first we had a push and then a correction. So when I was looking at this, I was expecting prices to get a massive rejection around an area like this, so we can see price pulling back to the downside, and let's say an inability, then we'll see prices moving again to the upside. So once we got to this area right here, we had an initial push to the upside, price came back, there was an inability for prices to go lower. So I'm still looking at this structure right here. We're still playing within this trend line thing right here, and we're making new highs right here. So we had a push to the upside, we had a pullback, we had another push again to the upside, and there's been another pullback. So what this is telling me is we've had an impulsive move to the upside. Just around this trend line thing, there's that difficulty for price to move to the upside, and this is something I like seeing as well, because every time you have an impulsive move and this difficulty for price to move to the upside, it's always an early sign for prices to pull back a little bit deeper So if this continues with this inability for prices to move higher, we might see prices pulling back again to the downside. You might see a push to the downside, then an inability for prices to go lower, then we can see prices moving again to the upside. So that's something I like paying attention to. So we're still playing within this trend line thing to the upside. We haven't cleared it properly. So the best thing for me at this point, so right here, so if we came to this area right here and we had an impulsive break to the upside, I'll just look for a consolidation thing coming back down and we'll take prices to the upside, but we're hovering around this area. So I need to see this, like we'll take out this part. I want to see this part taken out impulsively. Then I'll be like really convinced like we're taking prices to the upside impulsively. But if the break to the upside again comes in and it's just a shallow break to the upside, it becomes very concerning for me, because that's just that inability for prices to move higher, and then you could see the drop again to the downside. Now I have my buys already on this pair, so if you move lower, so let's step down to the 4-hour time frame. It's just more price action, but there's something you can look at as prices moving to the downside. You can see the wicks, you can see the wicks, you can see this and this. I don't trade based off of the wicks, but you're just looking at price action and you're appreciating what price is telling you. So based off of this, now you can step down to like the hourly time frame, and I'll show you guys my position thing right here. So here was my thought process. Initial push to the upside, and I explained this already. You get a push to the upside. Once you get a violation, it doesn't mean price is just gonna move to the downside, especially with predominantly bullish pairs. So when you look at predominantly bullish pairs, you get a push to the upside, you get a violation. 90% of the times you want to see price coming back to test this area, those highs. So it's something that happens a lot with predominantly bullish pairs. And that's a setup I've been trading for a very long time now. So you get this, there's a push, there's a violation, inability right here, price makes another high, testing this area right here. So it's the same thing. If you look at this piece right here, there's a push, impulse correction, price starts making lows to the downside, inability for prices to take this out. We're looking at a push again to the upside with the possibility for prices to test this area. So the immediate trading thing I have right now, because I'm in this position already, if price gets to this area, that's one point I might look to close my positions. And I might also look at this area right here. Now I'm not going to go in completely and just explain everything like why I'm expecting prices to also get to an area like this. So we're just doing the focus thing, not like the deep technical analysis. So here's the first part I'm expecting prices to get to. And if we can clear this, let's say if we clear this area and we're struggling, then we might see prices come into an area like this as well. But if we get to this area, depending on price action, depending on where the DXY is at, I might decide to close everything. So that's my trade right now. So that's the position I'm in currently. But I've shown you guys the big picture thing on gold, and I've shown you guys, let's say, on the hourly time frame, which is just an immediate position you can work with. So the daily time frame, again, you're looking at this picture right here. Where is price at and where is price most likely going to gravitate to? We currently sat at an area like this. So there's just two ways price can move here, or you can say three: impulse to the upside, to the downside, or a consolidation thing. So we have this area to play with. Now there's still a possibility you could see price pulling back to the downside like this. It's a very big possibility. Now if you look at the DXY, for example, so I'll show you guys why that's a big possibility. Let's put this on the 4-hour time frame. So you're looking at this move on the DXY. You understand already on the DXY. Let's say on the weekly time frame. So the weekly time frame on the DXY, it's telling you there's a high possibility for us to move to the upside. Now you step down to the 4-hour time frame on the DXY again, and you look at what price is doing within this channel. So you want to see sellers coming in from an area like this. You just want to see that inability for prices to move lower. Then you could expect a break. You see price coming back, retest, and that's it. Price starts moving again to the upside in the target psychological level of 100. If this happens on the DXY, which is like something that might really happen, what you should expect on gold at that time is an inability for prices to make new highs. That inability for prices to make new highs, and that's the point where you take this sells on gold and you hold it a little bit longer, because if something like that's happening on the DXY, there's high certainty you might see gold just dropping again to the downside and trying to test this trend line again. So that's how I look at prices. That's how I do my focus. And whilst I'm trading, I'm looking at these things. I'm looking at all possibilities. There's always two sides to a coin. So in as much as I'm in on this buy position right here, in as much as I'm holding these positions, sorry, it's one position by the way. In as much as I'm holding this position, there's a high possibility we might get a reversal and price just tanks again to the downside. But there's a reason why price is doing what it's doing. There's a reason why you might see an inability at certain points, and everything I'm saying is just based off of like technicals. So there's always a technical reason to what I'm doing. All right, guys, so that's my analysis right there, and I hope you liked it. I hope it's helping as well. And make sure you're patient, make sure you're consistent, and above all, make sure you're praying. I'll see you during the next one. Bye for now.